Welcome to Doc9 Tech Talks.
This week on the podcast, I'm joined by Ying Tan, who is the founder and Chief Executive of Dynamo. Ying founded Dynamo in 2006 and has grown the company into one of the UK's leading mortgage brokers and got quite a big focus on using new technology to transform the mortgage process. So I'm really excited to have the opportunity to talk to him today. So firstly, Ying, thanks for joining us. Do you want to start by giving us a bit of background about yourself and Dynamo?
Yes, certainly. And thank you. Really delighted to be here on your podcast, Mark. And thank you for inviting me and allowing me to kind of tell you a bit about my story and where we come from. So so I guess it starts in probably 1996, really, when I graduated from university. My background is ex-investment banking, Deutsche Bank, UBS, Goldman Sachs. I'm very proud of being one of the youngest vice presidents of Goldman Sachs, also a qualified accountant. So I'm not your typical mortgage broker, but I kind of stumbled on mortgage broking, I guess, when I quit investment banking in 2001. I became a full-time property landlord, built up quite a substantial property portfolio. But I encountered lots of different headaches in that I was going to my mortgage broker, tell them what to do, when to do, and how to do it. And I thought, blimey, if this is the best the mortgage world can offer me at the time anyway, then I should set up myself. I knew I didn't want to go back into the city. I missed the buzz of the city, but I also knew it was time for me to move away from just being a landlord and a developer, because I was still in my mid to late 20s. I'd done a lot of property projects and I'm dealing with tenants, with builders, etc. But I missed the buzz of kind of an office role, so to speak. So I did that, and I set the business up in 2006. Me, myself, and I. In a small Regis office in Guildford, and I grew it very quickly in the first couple of years. 2006, 2008 was really booming. Credit crunch hit. We got to about 30 staff, downsized to about 3 or 4, and I was at a crossroads. Do I continue? The other directors at the time decided, this wasn't feasible or economically viable for them, so they moved on. So I acquired the whole business and decided to pursue my dreams and continue to grow it. The first few years were really tough, not wanting to get the violin out, but didn't pay ourselves. It was very touch and go whether the business could be sustainable. I was lucky enough; I had my property portfolio that was yielding a good rental income. Interest rates were low, so I was able to bankroll my modest lifestyle via rental income. But I still had the vision of growing the business, and there was definitely a market for it. And as the market started to return to normality, we kind of grew. And I guess at Dynamo, we're very much a dynamic, entrepreneurial, innovative organization. We're passionate about people, clients centric. We've got over 2,000 5-star Trustpilot reviews. And we're very proud of the culture that we built. I think that's one of the things that people in the industry always comments on when they come to our office, pre-COVID, that the buzz and the environment is really second to none. And we're very proud of our academy. 95% of our staff that have joined us are people who have joined from non-financial services background. So we take them on whether you're an MBA graduate from Harvard, we get very few of those, or a burger flipper from McDonald's, we get a fair few of those. We're likely to give you the opportunity if you've got the right mindset and attitude. And that's the key, if you've got the right mindset and attitude, because we can train how mortgages work. It's not a particularly complex subject, but it's a lot harder to kind of teach the mindset and attitude. So we take people on, train them through our academy, and then hopefully turn them into great mortgage consultants. We've got some great stories of ex-policemen, barmen, waiters and shop retailers, and have gone and built great career. And I guess fast forward a little bit further, Dynamo was previously called the Buy-to-Let business, and we rebranded in about 2 years ago now. We got investment from Countrywide, which was a FTSE 250 business at the time. The rebranding was something that I was very keen on doing for two reasons, really. One, to kind of showcase that we are more than just a buy-to-let broker, which we certainly are. We've got a strength and presence in the residential sector now, commercial, second charges, life insurance, GI, etc., etc. And sometimes we were a victim of our own success because our DNA is very much buy-to-let. But we wanted to showcase a bit more about that. But also, I wanted to evolve into our name when we started our digital transformation journey to move away from this just we're a buy-to-let telephone-based broker, when a lot of what we've done is technology driven, and we wanted a name which could reflect that a little bit more. And when the opportunity came to rebrand to Dynamo, I grasped it with both hands and haven't looked back, and very proud over the last year or two we've ratified those decisions. One, we won the best overall broker at Mortgage Strategy Awards, which showcases that we're not just a one-trick pony with buy-to-let. And secondly, We won a technology and innovation award at a national award recently, which again showcased our kind of improvement and advancement in technology. So I hope I haven't gone on too much, but that's a little bit of a background about myself and the business to give some context to where we are today. And, we now have, one of the largest mortgage brokers in the UK, do £3 billion of mortgage business across the direct to consumer side and the B2B side. We're a mortgage club as well as a packager. So we've got a number of different strings to our bow, which allows us to keep ticking over.
Cool, that's a good one. I know there's a lot of history to unpack there, so it's a good summary. So I guess the key thing there is that you've been on the journey from startup and now a really well-established incumbent, I guess. I've no doubt seen over those years some of the false storms before in terms of mortgage technology innovation. From your sort of point of view, how do you see technology changing the mortgage customer experience in the coming years?
It's key. Ultimately, we are all in business to get the best possible customer journey. And that is, if you remember the story I was just saying, it was my poor experience as a customer which forced me to set the business up. So that's clearly important. And I think technology will, it absolutely has to, change the customer experience. The word API has been floating around for about 4 or 5 years now, but reality is whatever you called it, we've been using APIs for many years. We get our leads originating online and they inject directly into our system. And I guess, an involvement of that is to kind of get our data in our systems injecting into lender system. That's nothing new. That was around with a couple of platforms in the early days, but I guess the credit crunch stopped a lot of the development and technology when businesses were struggling. But certainly in the last 4 or 5 years, with the arrival of some really big VC and PE money, that's really kind of kickstarted things again. But I think in answer to your question, technology, will absolutely change and is already changing the customer experience. If you think of AVMs during the pandemic, well, we're still in a pandemic, but lockdown 1, it took a while, but the speed at which lenders started embracing AVMs and desktop valuations, was amazing. And the question is, can we build from that? Can we continue to use the technology we've been forced to use by the pandemic to help build a better customer experience for clients, full stop? And I think clearly AVMs and desktop valuations for the right type of property at the right lender values surely have to be the way forward, because it makes things quicker. And ultimately, if we go back to the customer, what do they want? They want a mortgage offer as quickly as possible, and the lender wants to do it without increasing the risk unnecessarily. So it makes sense. And if you think of things like open banking, think of all the documentation that we request for, I think mortgages, a file, if it was paper-based, thankfully we're not paper-based, but if it was, it would probably be a file that thick with all the paperwork you'd need. So, and a lot of that is your bank statements, your pay slips. And if we have the ability with customer consent to go into a bank and get all that data, there's also a lot less work to do from a reconciliation perspective, because a lot of what we do is reconciling what we've input and what is actually true. But if you're grabbing it directly from the source, then, there is no reconciliation to be done. And, that's going to be massive. So then, right at the beginning of the spectrum, digital ID, you look at the likes of the challenger digital banks like your Monzos of the world. I signed up for one, and you can literally just record a 30-second video, and it's all face driven and voice recognition, and take a picture of your passport and it takes that away, and you don't have to send originals in. And this is already happening. It's a case of how long it takes and who evolves, rather than if disruption is going to happen. Disruption's already happening. Disruption will win, because it's not just about replacing the humans. In fact, it's far from replacing the humans. It's making the humans better, faster, more efficient. And I love to use the word or the analogy about the Iron Man. And that is what I think technology will bring, to make things quicker and better for the human, so the human can focus on the advice aspect.
Yes. I guess it's interesting if you think about the human in this. I think there's been some predictions before around, would a broker be, we robo-broking and robo-advice, and, what is the future role of the broker? Particularly, actually, it's been interesting as technology has evolved. If you think 2008, as I understand it, to now, actually, it's more of an intermediated market than it was back then as technology has evolved. So you kind of think, perhaps looking from that vantage point originally, you would have predicted a different outcome. So how do you sort of see the future role of a broker in the context of this sort of faster moving technology in the market?
Yeah, I mean, in the short to medium term, the broker is absolutely still an imperative part of the process. I think what the technology will allow is to make that broker be a bit more time rich, which most brokers will tell you they're very time poor at the moment because of the duplication of work, the photocopying, the scanning, the uploading, and all the paperwork. So if we can bring technology in that will make us more efficient, it allows the human, the broker, to focus on increasing their productivity, and therefore, from a business perspective, writing more mortgages, and from a customer perspective, allowing to add value to that customer more, to focus on the advice aspect more than just the data gathering aspect. And I think that is definitely the way the future has to go, because it's not common sense. You don't need fintech to be told that. Before that word was even invented, in 2006 when I set the business up, that was the objective, to build a smooth journey from cradle to grave. Ultimately they've just wrapped that up now and they call it fintech, but that objective has always been there, getting technology to help direct the focus. So I think the broker is very much here to stay. I guess long term, long term, if you're talking about 10, 20, 30, 40 years, who knows? Humans, if you watch all the great tech films and sci-fi films at the moment, humans could take over the world and do operations and run the country. So if they can do that, I'm sure they can do mortgages as well. But I think in an immediate term, or even a shorter term, I don't expect robo advisors to take over the human advisors. They'll be working in conjunction with to make the humans better and faster.
Yes, that we do a lot of work with brokers and lenders, and consistently when we do user testing, that element of the human advice is still really important to people, given particularly first-time buyers, given the size of their kind of commitment, etc. But it's all around the other stuff, like why have I got to send in ID in the post? Why have I got to send my bank statements to another, not just to the broker, then the lender, but also then when the solicitor's doing their due diligence, etc. There's a repetition here. So I guess that's we do a lot of stuff within the mortgage market, but we're not directly in the mortgage market. And as a semi-outsider, I guess it is always, as you said, from 2006, it's kind of obvious how this should work in terms of plugging the various parties together, but it hasn't really necessarily happened to date. So you mentioned 2008, the financial crisis, obviously that had an impact in terms of investment in IT. What do you think the key reasons are that the industry is just a bit behind others, particularly insurance and others, where just passing of data electronically between parties is a lot more commonplace?
I think lending in mortgages is such a established mechanism that it's very difficult to turn an oil tanker. And the majority of the players in the market are big established players with proven records that do things a certain way. With the challenger banks coming, they've been able to evolve, and that's forced the bigger guys to evolve. But I think banks make such big decisions, and it's a lot of money, and I think they are. It's difficult for them to quickly change, because the benefit is not necessarily for them, because at the end of the day, all the work that we do as brokers, they kind of don't mind as long as they get the application right. So where there's not the clear obvious incentive for the banks to invest this amount, millions of pounds of money to evolve. And I think from a broker perspective, we're there thinking, okay, well, there's lots of things that need to be done, but you need everyone to on board. Even if I've got an agreement with one lender to not take original ID, for example, it's pointless if 90% of the other lenders don't. And having so many different variables, because you sit in the middle there with lots of different paths to different lenders, getting that all to align when the biggest winner is the broker who's doing all the work, yet the biggest amount of work probably need to be done by the third parties. It makes it very difficult. We will get there, but I think that's one of the reasons why there's so many different parties involved that it's taken so long. It's not just as straightforward as changing customer habits. Like Amazon, changed customers' habits. People went online, they did a couple of clicks, and before you know, you got something on your doorstep. They're in control of that, because they can sort the deliveries out, they can sort the nice websites and the user interfaces out. But with mortgages, the digitized mortgages requires lots of different parties to be involved. And, with all the intent in the world of a kind of a tech-based fintech type mortgage broker, you might have this clear vision, but if others don't have that, you can only do so much with your systems.
I guess that's you're starting to see, your platforms like your 27 Tech Apply and Mortgage Brain have a product, and Iris and then the Connect, etc. I guess that role of the intermediary, trying to, from a technology point of view, becoming increasingly important. I think it's been a bit, there was a lot of excited talk 2 years ago when these things first started. Obviously, MTE's been around for a long time, but
MTE's been around ages. I mean, that is effectively it. The whole purpose of MTA was to do that. You enter at one place and it goes and shoots off into the chosen lenders.
It does seem, particularly in the last year, that perhaps we've reached a tipping point where I think nobody's going to really forget the lessons of particularly lockdown one and that rapid innovation everyone had to do to work from home, and adopting ABMs and not requiring wet signals for those that did, etc.
Well, the irony is, if there is anything that ever comes good out of it, is probably the fact it forced players to innovate and to become a little bit more tech savvy, and it probably made more quicker, speedier, decisive decisions than any CTO could have ever hoped for. So
I guess if we dial back to your sort of platform, working with this ecosystem, it's a complicated space. There's many different parties, but I know you've been doing investing, thinking a lot about technology the last few years and investing in it. Do you want to give us a bit of an overview of the Dynamo platform and what it does and how you developed it?
Yeah, I mean, we've got a very bright IT director. He's moved into a more innovation role, but he's been with me on this journey from day one. And he, we looked at lots of different platforms for our direct-to-consumer arm first and foremost, and we quickly realised that what was out there at the time, bear in mind this was 2000, 2008, it just wasn't fit for purpose. A, because we were buy-to-let specialists, and everything was a little bit more generic, and B, the way we wanted to do things. And so we decided, having scoured the market, there was nothing quite suitable. We built something ourselves, and it's really kind of bolted on from there now. We're far from being perfect. There's, as you'd expect, a system which is 10 years old now, which has been bolted on a little bit, has its own challenges, and we're constantly looking to refresh that now. But certainly over that period of time, it's really evolved to a great tool, which is not just a CRM system, but also a sourcing system, a criteria guide, a sales tool, and bringing all of that in once, without having to pay a license, of course, where you'd maybe use 4 or 5 different softwares to bring that, has just been a massive benefit and has enabled us to be efficient and productive in all we do. But please don't think we've got the be all and end all, because far from it. I'm currently in the process of really looking to what can we do to enhance that, how can we continue to digitize it, because we went on this journey 10 years ago, so a lot has changed in those 10 years, and whilst we've evolved it, there's still so much more to be done. We've also got on our B2B side, that's much more recent. We built a system called Jarvis over the last year or two, and that certainly makes things a lot more easier with live chats, real-time case updates, and access to commission statements. So we've always gone down the route of building in-house, rightly or wrongly. There's probably, you could argue for 24 hours on which is the preferred route. I guess it depends on the scenario of the individual and the firm. But that's the route we've gone, although we're certainly open as we continue to evolve and continue to transform us digitally. We are currently looking at the various different options to make sure we continue to stay ahead of the curve, and we are as efficient and productive as possible. And with all the intent in the world, we're not yet, but that's the objective, and that's the focus, and that's the hope.
Okay, interesting. And I guess you've probably got an interesting vantage point as well, again, from given the company's been around for plus 10 years and have innovated in that time. Have you got any sort of lessons learned, or were there particular key challenges you overcame, and any sort of advice you'd give to those brokers that perhaps a bit earlier on the transformation journey from a technology point of view?
Well, the lessons learned is the pros of bringing it in-house is everything I described, but the negatives is the kind of knocked over by a bus syndrome, and that one person gets knocked over by a bus, then you're kind of left a little bit exposed. We've tried to kind of get that knowledge within the team, but ultimately you can never quite replicate the same knowledge as the person who built the system. But nonetheless, that has become less of a risk now. But certainly my advice would be, if you do decide to build your technology in-house, make sure that you've got a team of people, make sure it's fully documented, especially when you're not selling a piece of software. It's very easy, and you're not a big part of a big investment bank. It's very easy just to build on the whim. That might work there and then, but longer term, I think for legacy continuity, I think it's very important you document your systems and build the base. And I'd also go and shop around. I would say now the technology within mortgages and financial services is immensely and massively better than it was 10 years ago, and therefore make sure you speak to lots of these different parties and see whether they can cater for what you do. And some of them are small enough to and if you spend enough money to evolve their own system to cater for your needs, and not just a kind of a one size fits all. So I think the message and the learns would be firstly to document, and to kind of spread that knowledge amongst a strong team, but also to shop around and to discuss at length with very different third parties of what your objectives are and how they can meet them, because there are some very good pieces of software out there now, which is definitely moving at the same speed as the times are moving.
Mm-hmm. I guess the really exciting thing now is, as an agency that's often kind of curating and putting all the stuff together for unified experiences, your digital IDs, your AVMs, these types of things. There are services out there offering this on a SaaS model, pay-per usage. You don't have to put thousands through it necessarily, and you can build this functionality, either integrate it into existing systems or plug it into something new at relatively low cost.
Low cost now, yeah. But that wasn't the case a few years ago. But you're absolutely spot on now. And as the market has been more has evolved and has adapted, like you say, you can get the kind of onboarding type on FIDO type KYC, cost per inquiry or usage at a very reasonable price now. And that opens up technology to everybody. You don't have to have these deep, massive kind of development budgets, which only those with, millions of pound venture capital funding has been backed now. So I think you're spot on that technology is available to everyone, and therefore there's no excuse. And I think it's imperative that we continue to evolve and embrace it.
Yes. I guess to go back to your point, I guess the barriers often now, there are technology barriers naturally, but, from a business sense, it's actually around, okay, you could take your digital ID at the beginning of the journey with a broker, but ideally from a customer perspective, I don't want to then have to give it again and again to different parties. So it's
right.
that, can you tokenize it and pass it along down the chain? It's that kind of, maybe it's technical to a degree, but it's kind of non-technical, it's more business focused kind of.
It's more business focused. I think technically it probably can be done, but it's whether those people that need to see it, the solicitors at the back end of the process, the lenders, will they accept it? There's no point you doing all this great tech at the beginning to get their ID, but actually the lender wants you to have seen the original passport. Yeah. I can technically get all of that EIDV, but ultimately the lender won't accept it. They want me to have physically seen the passport. So what's the point of me doing it? And then again, you go to the solicitor at their end, they want to see it themselves for their own eyes, because they can't rely on what you've seen. So this is what I'm talking about, which is why the whole process is a lot harder, because it's not just reliant on what is within your own gift, within your own business.
And then I guess there's the other thing, from a regulatory point of view, and that we are starting. There's been a few kind of government initiatives around digital ID as well, and I think I'm always an optimist in life. It does feel like momentum. AVMs has kind of really taken off, and wet signatures is no longer required, etc.
I think we're there. I think all the parties appreciate the direction of travel, and no one kind of denies it. It's at what speed we're going in that direction, and what we can all do to kind of help us along. So I think
an invasion of 18 months old and
I know that feeling. I know that feeling that I purposely arranged with you to be at this time, so my children are not screaming because they're in their afternoon naps. But
so I guess the final summary is you published a book last year.
I did.
Really interesting, and I guess it was a combination of personal your story, but also a lot of tips and hints for entrepreneurs out there. And I think you got some really useful kind of insights to share. I guess a lot of people talk about writing a book, and there's a saying everyone's got a book in them, but not that many people actually follow through. What sort of prompted you to write the book and get it out there? And I'd love to sort of hear how your journey was.
Well, you're right. I think everyone's got a book, everyone's got a story, haven't they, to tell? But it's one thing saying it and do it, but that's my mindset and my motto. I'm a person, if I say something, I'm going to do it, I'm doing it. And the actual catalyst finally was when my mum sadly passed away in 2018, and I had my twin girls, and my wife was pregnant with, and I said, my children are probably too young to kind of appreciate any of the tips and the stories I tell them now. So I wanted to put it on paper. It was never about the sales, never about, anything else, but passing a legacy to my children. I probably lost money, as good as the book has done in terms of getting traction, it's not an expensive thing to do. And I'm lucky enough that I had a publisher in Wiley that wanted to snap up the rights to it, and that makes it a lot easier for me. But it means there's very small margins in it for me. But for me, the biggest achievement is putting some of my learns and my stories on a piece of paper and leaving a legacy with my children. And the story and the book really brings a balance of my own personal story, but also how I've learned from my life lessons to evolve and to develop myself to become a successful entrepreneur and business person. And the title, Don't Push Too Many Trolleys, is all about my experience when I worked at Asda. One of my first jobs pushing trolleys, and I wanted to do everything efficiently. So, just like we're talking about productivity in Ironman. So rather than going and getting one trolley every single time, I wanted to put 20 trolleys, because then I'll only need to walk up once and come back once. Makes perfect logic, except for the fact if you push too many, you're going to crash. And that's exactly what I did on my first day. I crashed into a car, I got pulled in, and I almost lost my job. So it's making sure you only can take on as much as you can handle. I've learned the hard way a couple of times, but I'm trying to learn now that you've got to know when to say no, stop. But it is that analogy of spinning too many plates or juggling too many balls. And lots of other life's antidotes in there. I talk about my father's story, who's given me the inspiration that has made me the person I am today. He hitchhiked from Malaysia to the UK with £20 in his pocket. Went through lots of trials and tribulations, almost died a number of times. But that's a podcast episode in its own right by itself. So I won't go into the details of that. But that is his hard work, his sacrifices, and his dedication from a small village in Asia, hitchhiking all the way to the UK in 1959 has been a massive inspiration for me. And seeing how hard he and my mother had to work raising me to give me the opportunities. Gave me the impetus and the focus and drive to be successful myself. And of course, I have my own family now, and I've got 5 wonderful children, and they form my why. And I want to continue to work hard and give them the opportunities. It's not about having money to buy them anything they want, because that won't be a good thing for when they get older. But it's about giving them the opportunities to choose the route they want to take in life. And that's what I hope I do. But and I think, like everybody, you've got to know what your why is, and you've got to know what your reason for doing what you do is. And I certainly know mine, and it allows me to wake up every morning with a bounce in my foot. I'm extremely passionate about helping people. I'm extremely passionate about our industry, and I genuinely believe that if we all club together and we add value, that we are in a wonderful industry. And despite the horrible economic times and a global pandemic that we will get through this eventually, and we will continue to thrive and continue to evolve, and that's the same mindset and analogy that's needed in everything in life.
Yeah, no, as always, a really positive message in there, and I guess love the book. One thing I didn't like was you're a Liverpool fan. I'm an Arsenal.
Well, this is always the danger.
So,
I'm in danger of alienated a good chunk of the population, but hopefully they can get past that and read the rest of the book. But yeah, a Liverpool fan for my sins. And if you'd interviewed me, a month ago, I would be happily smiling. But I think very quickly we should cut that subject off, since the Reds are not doing as well at the moment.
So I guess all good bookshops, Amazon, etc. I guess that's if people.
Yeah, Amazon. You can go to Amazon, type in "Don't Push Too Many Trolleys." It's a hardback book, as you've seen there. Equally, you can go directly to the website don'tpushtoo-many-trolleys.com. No, it's .co.uk. Beg your pardon. But yeah, either way, you can get the book from there. And I hope you enjoy the read. Hope you get some nuggets of inspiration. And would love to get some feedback.
Good stuff. Well, yeah, I highly recommend. And thanks a lot for your time today. It was great to speak. And hopefully we'll catch up a bit later in the year and see Dynamo's further development over the year goes.
Look forward to it. Mark, been a pleasure. Thank you for inviting me.